You may be wondering, how do private money lenders actually get and evaluate deals? So let's talk about it. First, where do these deals come from? For me, a lot of my deals have come from within my current network, right? So when I first started private money lending, I sent out a mass text message to every real estate investor I know, every person I know who's doing a small business, entrepreneurs, startups, investors, and let them know, like, hey, I started a private lending company and I can do loans of this size for this term, for this type, etc. And that's where it started for me, right? So I had my first few borrowers from within my network. And just keep in mind, this is really a relationship based business. So typically, you're not getting cold leads. It's usually a warm lead that comes your way. And it's usually through someone else that you know that they also know. And you take it from there. I have also received requests from people who see that I'm teaching other private money lenders. So sometimes on our lenders and friends Instagram, people get confused and they're thinking that I'm offering loans on Instagram. It's like, well, no, I'm teaching people how to compliantly and safely loan out their own money, right? So sometimes I'll get leads that way as well. Another thing I've done is host free live events, like, simple events, coffee meetups and Taco Tuesdays, things like that, where I can bring people to me who may be investing in real estate and may need funding. So that's just some of the ways that I've received loan requests. Now, once I get a request, like, how do I actually look at it, right? So the first thing is thinking about if it even fits my lending box. Now, a lending box is very similar to a buy box in real estate. So in real estate, when you have a buy box, you're really specifying what types of properties you're looking for and what price range and what geographic area, what is your exit strategy, et cetera, et cetera. Same thing in private money lending. So my lending box is very specific. And this makes it super easy to weed out people who don't fit. So if you can imagine, if I'm getting a ton of requests or people reaching out, I can just ask a few initial questions and quickly learn whether they even fit my lending box. And if they don't, then I can move on, refer them to someone else, and let them know that there's not a good fit. And if it does fit, then I can move on to my interest in due diligence process. Now, having a written lending box is really going to help you because it can get overwhelming when people find out you're a private money lender and all of a sudden you're getting all of these requests. Okay. So, at a minimum, your lending box should have the types of loans that you do. So, are you a fix and flip lender? Are you a lender for people doing burrs? Are you a short term rental lender? Are you an equipment financer? Do you specialize in medical equipment loans? Are you a lender for people who provide ambulatory equipment? I don't know. Okay. Whatever the type of loan or types of loans are that you do, that should be on your lending box. Another thing you want to put on there is the geographic area. I know some people who get started in private money lending, and a huge mistake they make is they try to lend in all 50 states. Do not do it. It's not a good idea. First of all the 50 states have different laws that govern lending in those states, right? So it may not even be legal for you to be loaning money in all of those states. Another thing is they all have different usury rates and foreclosure rules, and it's just too much to keep up with. So stick to 1 to 2 states, put that on your lending box. Another thing you want to put on there is how much you're willing to give in loans. So it can be your typical loan size, it can be your max loan amount. And then you also want to specify your terms, right? Like the term of the loan, how long it is. Your minimum term, can you do 7-day loans or is your minimum 3 months? What's your max term? Can you do 12-month loans or are you more of a 11, 10-month kind of person? That information should be on your lending box as well. These are just the minimums. You may want to also put other things on your lending box, such as required documents, a link to your request form, or, you can really make it what you want it to be. It's mostly an internal document, but I have found myself sharing that kind of lending box abbreviated with certain people who want to refer business so that they know, I'm making sure that I'm weeding out some of the people that clearly do not fit and then referring from there. So it's up to you. You can choose to share it or you can keep it to yourself. But I think it's going to be easiest if it's in a format that is shareable. So you're not repeating yourself over and over again. So that's your lending box, and that's really going to help make sure that your requests are narrow and help you not be overwhelmed with the different requests you're getting. The last piece of this is, okay, now how do I actually evaluate if I want to do this deal? So I teach a framework that helps you decide if this is even something you're interested in. But let's assume that you are. Let's go beyond the yes, I'm interested in this. The next piece of that is going to be doing your due diligence. Now, that is a lengthy process, and I can't fully explain to you in the few minutes we have here how to do that, but I can tell you a few things. So, your due diligence process will depend on the type of loan you're doing. It'll depend on the type of collateral. It may depend on the state that you're loaning in, a lot of different factors. But let's say you're doing a fix and flip loan in, let's say, Alabama, for instance. And let's say you're doing only the rehab portion of the loan. So when you get into the due diligence phase, you want to look at the borrower, and this is assuming this is a business purpose loan to a business entity. So you want to look at that borrower entity and you want to vet that borrower just like a bank giving a credit card or doing a consumer loan would vet an individual. You want to vet that borrower. The second piece of that is vetting the actual project, right? So if you're doing fix and flip loans, you may want to have some sort of real estate experience or fix and flip experience so that you can properly evaluate that project, because you're going to be looking at that investor's numbers. You're going to be looking at their purchase price, their ARV. You may be looking at their CMA, their comparative market analysis. You may be looking at their rehab budget and seeing if it's actually appropriate. You may want to understand their insurance and, their holding costs, and really looking at the entire project to make sure that it makes sense to you. Okay. So first you're vetting the borrower entity, and then you're vetting the actual deal. You may also want to vet the underlying owner of the entity. Okay, this is up to you. But sometimes, even though the borrower is a corporation or an LLC, you may also want to vet the owner or owners of that entity to make sure that everything looks good. Okay, now everyone has their own process because that's what makes private money lending private. But you can decide how much vetting you want to do, how much due diligence you want to do, how deep you want to go, because it's your own process. Okay, so you can decide, I want credit check, personal and business. I want operating agreement. I want P&Ls, balance sheet, whatever you want to ask for, that is appropriate to help you evaluate the transaction. So that's where some of these deals come from and how the process actually works with doing the due diligence piece. Feel free to comment below. Let me know if you have any questions. You can definitely join our free course if you're new to this and you want to get started with some resources. Just click the link in the description and you can start from there.